What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking all about the $100 bullish case for silver. We've compiled a ton of data from industrial uses, silver supply and demand, annual mine production, analyst price targets, CEO price targets of some of the largest silver mining companies. So this is going to be a very in-depth video, and this is also the follow-up video to our Will Silver Hit $100 interview with the CEO and founder of First Majestic Silver, which is one of the world's largest silver mining companies. So guys, I hope you enjoyed this video. This is part of my dedication to the constant coverage on the precious metal sector, and this is just more of an expansion of my views on the precious metal market and my long-term bullish outlook on gold and silver, but of course silver specifically in this video, guys. So let's get straight into it. We're not going to waste any more time. Of course, if you do support the channel and you do like these kinds of videos, the only thing I ask is for you to kindly smash that like button, along with, if you're a new viewer, you appreciate constant coverage on the precious metal market, then of course don't forget to smash that subscribe button and the bell for notifications for your constant daily coverage on your favorite companies, your favorite assets, commodities like precious metals. And let's get straight into this video. Alright guys, so let's start this video off with the reasons why I like silver, why I've always liked silver, and why I'm so bullish on silver even to this day. So as we know, what's been going on with this whole global illness, there's been unprecedented amounts of fiscal and monetary stimulus, aka the central banks. Most of the countries around the world have had to provide fiscal stimulus, which results in pretty much dilution of their currency. What is actually backing those fiat currencies? Not much. But then when you have an asset like silver, for example, silver, there's a finite supply of it. It's a commodity, it's a precious metal, and we're going to be talking later on in this video about how silver is in high demand right now. You guys are going to be fascinated by what has actually been going on in the market, and I'm surprised that silver is not much higher than what it is today, but we'll get into that a little bit later. But I love the fact that the amount of silver can't be manipulated, it can't be controlled. When it comes to central banks, it's easy for them to just stimulate, print more money. They can essentially control the currency and do whatever they want with it. But that's not the case for silver. So I think silver is a great insurance policy, especially during these times of unprecedented stimulus. That's one of the many reasons why I like silver so much. We're going to quickly dive into the charts before we get into things like the uses for silver, along with all the price targets, and then the supporting supply and demand factors. The main reason why silver, I think, should be trading much higher than what it is today. So let's dive into the charts first and take a quick look at how silver's performed. We'll also be taking a look at the charts from a while back when silver in fact spiked to over $50 per ounce. But I feel like we could see a much more epic run up over the next couple years. So as we can see here, guys, during the whole global illness, silver did crash all the way down to about $11 per ounce, and we've bounced back and recovered substantially. Based on our interview with the CEO of First Majestic Silver, Keith Neumeyer, he stated that around 1850 is a level that we should be watching very closely. So that's just for the short term. But if we zoom out here, guys, we can see that at one point there, 2010, 2011, silver peaked at basically $50 per ounce. Silver has had a history of explosive gains, and if we zoom out even further, we can see that silver back in the 1970s hit highs of over $51 per ounce. So this is nothing new for silver, and we have seen the price run up quite substantially. But now let's get into the industrial uses for silver above and beyond just silver as a precious metal. So uses for silver in the US, we can see just a couple years ago, the 35% of silver in the US was used for electronics, 25% for coins and metals, 10% for photography, 6% for jewelry, and 24% other. The demand for silver when it comes to electronics, especially with this technological revolution that we're seeing, the uses for silver are endless. But when it comes to silver and industrial applications, guys, I feel like the most important thing with silver is the industrial use when it comes to autos and electric vehicles. And let's take a look at this chart right here because it's pretty astounding. So right here we're at 2020, and right now we're just under 50 million ounces of silver being used per year when it comes to electric vehicles. Now let's keep in mind, annual silver production is around 1,000 million ounces of silver. So at 50 million ounces, we're using roughly 5% of the global supply or yearly production of silver. Now jumping just a few years ahead, that is expected to increase by a couple million ounces pretty much every year steadily. And by 2030, we should be using just under 70 million ounces of silver. Secretly, Elon Musk is very bullish on silver. So for all my Tesla long-term investors, so now that we know the industrial uses for silver and the amount of silver that it's going to take in order to fuel this next technological generation or technological era, whatever you want to call it, let's take a look at the silver price forecast for the next couple years. The price targets are pretty consistent, around $18 to $20 for the near term. So it's pretty safe to say that give or take a few bucks per ounce, most people think that silver should be trading around $18.50 to the low 20s. But we have one very interesting, unique silver price target that absolutely blows it out of the water, and that is from Keith Neumeyer, the CEO of First Majestic Silver, at $130 per ounce long term. And that's confirmed in the two articles that we presented for you guys in terms of all the different silver price targets. So this is another article from Investing Haven's research team, and they are biased on silver with a spike to $24 short term, and in 2021 spike to $28. But that's just getting started. The bullish case for silver should continue over the next couple years, at least into the foreseeable future. So guys, with price targets aside, let's take a look at the actual production of silver and what's going on there. So in terms of million ounces, Mexico is the world's largest silver producer at 190 million ounces, followed by Peru and China at 135 and 110 respectively. Once we get away from the top three, we can see that Australia, Russia, and Poland produce just 40 million ounces, 40 and 42 million ounces, and then Chile, Bolivia, and Argentina at roughly 30 million ounces. So Mexico is where most of the silver mining companies are in. So now let's take a look, guys, at the supply and demand, because production is one thing, but we need to know that the demand is there. So in terms of 2019 production, we're at roughly 1,023 million ounces of silver produced and total demand of 991.8 million ounces. So as we know, supply and demand for silver is very tight, yet silver is anticipated to be used in so many more things like electric solar panels, the green energy sector, electric vehicles, electronics. That's where the world's going. The world is going towards electronics, electric vehicles, and silver is going to be in much higher demand. So we know that the demand for silver is going to be going up, but what about the production? So guys, referencing an article about silver supply, global mine production fell for the fourth consecutive year in 2019 by 1.3% to 836 million ounces, down from 847 million ounces in 2018. This was a result of declining grades at several large, primarily silver mines, and disruption-related losses at some major silver producers. Primary silver production declined by 3.8% in 2019 to 240 million ounces. On a country basis, the largest production declines were led by Peru, followed by Mexico and Indonesia, which were partially offset by gains in Australia, Argentina, and the US. So as we can see, guys, we know what's going on with this whole global illness. It's not good for the mining sector, although mining stocks will get through this, mining companies will get through this. But long story short, demand for silver is expected to increase dramatically over the next 5 to 10 years, and silver production is expected to stay flat or even decline. 2018 could have potentially been the year for peak gold and silver production, of course silver specifically. But that's where we arrive at such a bullish case for silver, because eventually, this is unsustainable and the price is going to need to continue to rise. Now we need to take a look at something very interesting, and that is the gold and silver ratio. So currently sitting at 99.11, what is the gold and silver ratio? The gold and silver ratio is simply how many ounces of silver does it take to buy 1 ounce of gold. As we know, gold is much more expensive than silver. Back there in March, we did see the gold and silver ratio hit an all-time high above 120, and now we're back down just below 100. But it's looking like it could potentially head a little bit higher, as silver has been struggling over the past couple trading sessions. I do, however, feel that the gold and silver ratio needs to contract and is far, far too high, especially knowing, the demand and the supply when it comes to silver and production. So last but not least, I quickly want to talk about bubbles. And the first thing we're talking about is revisiting that first silver bubble. And I found a fantastic article on this. So the silver price ran up so high that it became a political problem. Several officials at the CFTC were rumored to be getting killed on their silver shorts. Eastman Kodak, whose black and white film made them one of the largest silver consumers in the country, was thought to be borrowing silver from the Treasury to stay in business. The Carter administration took a dim view of the Hunt brothers' activities, especially considering their funding of the ultra-conservative John Birch Society. The feds viewed this as a conspiratorial attempt to undermine the US government. It was the first time to pay the piper. The CTFC raised margin rates to 100%. The Hunts were accused of market manipulation in order to unwind their position. They were subpoenaed by the Congress to testify about their motives. After a decade of litigation, Bunker received a lifetime ban for the commodity markets, a $10 million fine, and was forced into Chapter 11 bankruptcy. So looking back to Silver Thursday was an event that occurred in the US silver commodity markets on Thursday, March 27, 1980, following the attempts by brothers Nelson Bunker Hunt, William Hubert Hunt, and Lamar Hunt to corner the silver market. A subsequent steep fall in silver prices led to a panic on commodity and futures exchanges. So the silver bubble in the 80s was simply due to pure manipulation of the markets. And then holy smokes, guys, look at the climax. The Hunt brothers had invested heavily in silver futures contracts through several brokers, including the brokerage from Bash Hasely, Stuart Shields, and Prudential Bash Securities and Prudential Securities. When the price of silver dropped below their minimum margin requirement, they were issued a margin call of $100 million. The Hunts were unable to meet it, and the Hunts were unable to meet the margin call, with the brothers facing a potential $1.7 billion loss. This caused panic in the financial markets. Finally, we're going to talk about, the coming silver bubble, and I found some pretty interesting data for you guys. So, in terms of bubbles, the asset requiring the least amount of buying to create a bubble is automatically the best candidate for developing into the biggest bubble. Now, we know how stocks move. A stock with a low float, low amount of shares outstanding, it's easier for investors or big investors to move the price because there's less shares out there. So the same goes for commodities, the same goes for silver. The fuel for any bubble is total world buying power versus the actual amount of an asset available for purchase. Previous as well as prospective bubbles in stocks, bonds, real estate grew to many trillions of dollars of total valuation. So at $200 per ounce, all the silver in the world would only amount to 400 billion, not even a rounding error to the total valuation of stocks, bonds, real estate, and even gold. In other words, due to silver's current undervaluation and its shockingly small amount in existence, it has more room to the upside than any other current asset. So that's the thing, guys. We need to always remember the supply of silver, how much silver there is out there. So guys, the last thing I want to talk about, and this is the reason why silver is more volatile, and this is the reason why silver has that explosive potential, is the size of the silver market and the supply of silver. So if we take a look at this chart right here, this is 2019. The market value of 2019 supply, silver versus gold. So gold at 192.6 billion, much bigger market value, and silver at just 16 billion. At current prices, annual gold supply is 12 times bigger than silver. Silver isn't just smaller than gold. Look at how it compares to the market cap of some popular stocks. So let's take a look at the annual supply of silver versus many other companies. So we've got Apple. Now Apple's over $1 trillion. We know that ExxonMobil, Procter & Gamble, Bank of America. Gold annual supply of silver at just under 200 million. And then we've got silver at just 16 billion. So that's why silver is so volatile. Last but not least, silver stockpiles are falling, gold's are rising. So the difference may not seem to have immediate importance to an investor, but it's behind the scenes development that could potentially have big consequences in certain circumstances. Governments and other institutions used to hold large inventories of silver. Today, however, most of them no longer have stockpiles of the metal. In fact, the only country that warehouses silver are the US, Mexico, and India. So look what happened to those inventories in the 1970s. So anyways, guys, that was my deep analysis when it comes to silver. Everything from price targets to supply and demand to how much silver is actually out there in the market and what we're forecasting. So long story short, I'm so bullish on silver, not just for the industrial uses, but for the fact that, it can be used as a safe haven, a hedge to inflation, and the fact that, the silver supply is just so much tighter than gold. So the last thing I'm going to do in this video is just recommend a couple quick videos for you guys to watch if you are still interested in silver. And of course, we'll link that in the description, and that's it for the video. So the first video, it's our most successful video on the channel, and that is the CEO interview with Keith Neumeyer. Will we see $100 silver soon? Then we've got a full overview on First Majestic Silver, which is in fact his company. what are the top 5 silver mining stocks for the new bull market, and then finally, what are the top 3 silver mining stocks to buy today, with an in-depth analysis into silver. So anyways, guys, I hope you enjoyed this video. It's always fun shooting videos and talking about the precious metal market, just as I'm so bullish on this. So I hope you enjoyed this. Last but not least, guys, don't forget to leave a like if you did like the video and subscribe. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell stocks. You heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decisions for yourself. That's it for the video. This video is not financial advice. We'll see you guys in our next video.